Well, dear colleagues, ladies and gentlemen, welcome to our public meeting. I hope you've all been keeping well since we last saw each other. And of course, I do hope that not too long into the future, we shall be able to have the opportunity to meet in person as well. I want to welcome our official observers to this meeting. Robert Buchanan, who is our PIOB observer, Junpei Kato from the Japanese FSA, and Galen Hansen, our IESBA CAG chair. I also want to extend a special welcome to Richard Fleck, who is attending the rollout session on June 9th and benchmarking session on the 14th. But I believe that Richard is observing most of the other sessions. So a very warm welcome. Also a warm welcome to Sylvie Soulier, who will be attending our sessions on the group audit on June 11th. And I believe Sylvie is also observing today and will be observing the rest of our meeting. So a very warm welcome. Others will join as presentations come up, and I will welcome them at the time. Our virtual meeting format, as you know, has helped to have a multiplied number, an increased number of observers. Today, we have public observers 30 who are 35, who number 35, and who have registered for this board meeting. They will be observing our meeting via live YouTube channel. The highlights of our agenda, which is a very important agenda, is first of all, technology, with which we'll be busy today and tomorrow, and the next meeting anyway. We will receive a presentation on blockchain as part of our technology fact-finding work stream shortly. Tomorrow, we will receive another presentation on blockchain, as well as an update on the IESB's technology work stream. And we'll, of course, hear from Brian and Rich on progress of the work and the proposals from both the technology working group and the technology task force. Later today, we'll also receive an update from Kim on NAS and Fees Rollout, which, as you know, is one of our very important initiatives following our approval of these standards. On Friday, we will discuss, as I mentioned, the proposals on engagement team and group audit from the task force. And Sylvie will be presenting these. And then on Monday, we will consider for approval for exposure, proposed conforming amendments to the code as a result of the finalization of the IESB's QM standards. Lisbeth will present this item. Also next Monday, we will receive a further update from Laura on the benchmarking work, which is also proceeding. And on the final day of our meeting, we will hear from Jens, the preliminary report and recommendations from the tax planning working group. And we'll also consider the PI task force's preliminary review of the responses to the exposure draft that we have received, and Mike will be presenting that. Now, I really want to thank all the participants who have provided advanced comments on the agenda material to the relevant task forces. And of course, I always thank, and this time very much, the task forces and the working groups and the staff who did very hard work in preparing the agenda materials. Also, a special thank you to those of you joining the meeting on social hours in your time zones. Our thoughts are especially with our colleagues in Asia, in Australia, New Zealand, Middle East, Africa. We really thank you And I must say that your commitment is greatly appreciated. Now, the schedule of our outreach and related activities is in agenda item 1B. I want to thank all board participants who participated or will participate in outreach activities, and we have enough that we've done and more coming up. If you have or will participate in outreach that is not recorded, please let us too know. A brief update on the Planning Committee. Since our last meeting, the Planning Committee met by video conference in April and May. Topics discussed included outreach activities on the PI project, the progress on key projects and initiatives, PI technology and tax planning, the PIOB's updated list of public interest issues, transition planning regarding the monitoring group recommendations. We've talked briefly about that in executive session, non-authoritative material, and planning for the September and December IESBA meetings. In May, we had a CAG meeting on May 17th. This was the second part of the CAG meeting, during which we had very productive discussion on the engagement team group audit independence project and on the tax planning initiative. Sylvie and Jens will report on the feedback from the CAG during their respective sessions. I would like at this point to invite Galen to share any remarks or observations from the March 17 CAG meeting, if you have anything, Galen, that you would like to add.
I'm good. Thank you very much, Stavros, but I don't have anything
okay
at this point.
Okay. Last May, the previous month, we held our meeting with the national standard setters. This was held virtually, of course, on May 11th, was attended by participants from 14 jurisdictions. We discussed the technology project and tax planning initiatives. Again, Brian, Rich, and Jens will report on the feedback we received during their respective sessions. And I want to thank, of course, Jens, Brian, and Rich for leading those discussions and leading them in a way that they have elicited very good comment that has enriched our work. We also had a joint session with the IESB NSS group, in which Paul Munter, who is the acting chief accountant of the SEC and one of the co-chairs of the monitoring group, gave an update on the scope and progress of the transition planning efforts of the monitoring group on the basis of the recommendations of the monitoring group reform paper. Now, let me also mention here that the IESBA National Standard Setters COVID-19 Working Group, they have put out their article titled Five Ethical Challenges that will intensify as the pandemic wanes. So this is challenges about the phase we're going into. This was issued in May, and it is available on the IESBA COVID-19 focus page. It highlights real-life ethics and independence challenges that accountants and auditors around the world will or are expected to face as the world comes out of the pandemic. I really want to thank sincerely Richard Fleck, who I hope is listening to us, for leading these efforts, these very productive efforts, and also, of course, to the 6 participating national standard setters who are APESB Australia, the Chinese CI CPA, CPA Canada, IRBA from South Africa, the UK FRC, and the USAI CPA. I really thank them very much. This was an excellent collaboration. As I said, very productive and very useful. On staff matters, very briefly, we shall have 2 interns joining the IESBA staff team over the summer. During their time, they will assist the team with research work, including technology and also looking at ESG reporting, which, as you know from our previous conversations, we've started to look at. The draft minutes from our March public session have been distributed to the board for review. If you have any comments on those minutes, please email them to ASTU. By June 21st, I do plan to ask the board for approval of the minutes on the last day, June 2025. I think I will stop here in the interest of time, and I've given you all my updating information. And we can go into the first item of the agenda, which is on the technology update from the working group. And if I may turn this to you, Brian, please take the microphone or the floor.
Perfect. Well, thanks very much, Stavros. And it's my pleasure to kick off the first information session and educational session of 3 during this meeting, with 2 more to follow tomorrow, as Stavros, as you indicated, that have been arranged by the Technology Working Group, with significant thanks to Deanne Jules for organizing these for us and arranging the speakers, which is great. We thought that bringing in information sessions were a helpful component during the TWG Phase 1 work, and we also heard some feedback that it would be valuable to again bring some external expertise in the area of technology and ethics to our board, in addition to our TWG meetings. So for this first session, I'd like to warmly welcome Professors Katie Bacharach and Jack Castanet, both of Hofstra University, in the area of accounting, and specifically researching in the areas such as international accounting and auditing, AI and blockchain and governance. Katie and Jack will be speaking to us about the use of blockchain in corporate financial reporting and regulatory implications. And so without further ado, Katie and Jack, I'll pass over to you.
Welcome from me too. Warm welcome. Thank you.
Thank you. Look forward to speaking with all of you. I'll just share the presentation. So I'm Katie Bacharach, assistant professor at Hofstra University. I'm here with my colleague,
Jack Castanet, also at Hofstra University.
So what we're going to do is just kind of walk through a little bit of an overview of current uses of blockchain in corporate financial reporting, a little touch on auditing, and then discuss this in view with an ethics framework, and as well as some the current regulatory environment and what's going on. So just a brief overview. I'm happy to answer any questions during or at the end of the presentation.
One thing to level set as we're about to go through, please keep in mind that for the use of blockchain to be valuable, you need 3 parties. So as we're doing this, keep in mind you need 3 parties. If you just have 2 parties, it's really not it's not a well use of your resources. And also keep in mind that right now, even though we are going to give you some examples of its application in financial reporting, most of the current use applications are not in actual financial reporting. They're more in logistics, payment processing, things like that. But as we start to see more transition to financial reporting, we're going to talk about some of those considerations that you need to go through. But right now, there aren't as many use cases as we would like, but it is starting to grow.
Yeah. So we wanted to start off with a couple of snapshots from some 10Ks. Some of you might be aware, Overstock.com, though not originally in the blockchain business, is very much interested in this area. And so this is disclosure from their 10K. Just kind of, again, wanted to lay the groundwork of what we might see going forward as more firms get involved with blockchain. So in their note 1, they put right there in their first note of their financial statements that they're really working on these blockchain technology initiatives. And they're in particular interested in using blockchain in the area of securities settlements, which again is not really related to their underlying business model. But they're starting a kind of a whole branch of their business focused on blockchain. And in particular, they converted some of their preferred stock into what they call a new digital voting series of preferred stock. They actually have a stake in a company called T0, which is a medium for exchanging digital assets and cryptocurrencies. And so this version of their preferred stock is the first blockchain-based public digital stock as a public company. And so the T0 is a broker-dealer where these shares can be traded. And so this is just an example to start to see some of the language that we see firms disclosing around blockchain in their 10Ks. Again, not being used extensively in financial reporting in terms of generating the numbers on the balance sheet or income statement, but just one element of what we might begin to see. And so we want to kind of to highlight what they also in Overstock highlight as risks related to this blockchain. So in their business risk section in the 10K, they actually do disclose that this preferred stock that's now digitally stored as a digital asset, that there is the risk that the record of ownership of the digital wallet address could be made available to the general public, and it could be possible for the public to determine the identity of the record holders. And so identity risk is one that we'll talk about in this presentation as we shift towards some of the ethical considerations of blockchain. It is seen as being anonymous, but how anonymous is that if you maybe not the casual individual, but somebody that understands the technology can kind of trace some of these transactions going on between wallets. And the publicly available information that they list here, they list this in the 10K as what is available on the blockchain for this preferred stock is the wallet address, the security position, and then the history of debits and credits, right? Because it is an available blockchain where you can see and trace these transactions. So you might not know the personal identifiable information behind a wallet address, so really the profile on the blockchain, but with enough information publicly available on the blockchain, it could be possible for identity to be determined. And so we wanted to highlight that.
Okay. The next one we have here is actually taking the cryptocurrency, right? Which you can have blockchain without cryptocurrency, but you can't have cryptocurrency such as Bitcoin without blockchain. So just so when we're getting an understanding of that, that's how those two work together. The first instance of a US public company reporting crypto or digital assets on its balance sheet was MicroStrategy. Please note, MicroStrategy is not an investment firm. They were a historically service firm. And last year, they were the first to report about, what do we have here? About 1 billion worth of cryptocurrency on its balance sheet. So when they did that, they had that full investment in Bitcoin, and they immediately had to take an impairment loss. Because right now, at least on the US, and as we're going to talk about with IFRS as well, cryptocurrencies are classified as intangible assets in the US, which means if it ever dips, you impair it down, but you can't write it back up. So when we're thinking about some of these standards, right now, the holding of cryptocurrencies on the balance sheet actually doesn't reflect their actual fair value or their position, since the majority of the use cases of it right now are purely speculative investments. So even though we have these speculative investments that are being marked up and down on a daily basis for exchanges, they're currently being carried, at least in the US, cost minus any impairment. And in IFRS, again, we're going to talk about how it's handled there, but it's still also classified as an intangible asset. It's not classified as a security or an investment vehicle. Katie, can we go forward one, please? Thank you. So when they're talking about it, MicroStrategy came out and they tried to put some language around it to talk about how they obtain this cryptocurrency. So if we're thinking about ethical issues, if you're on a public blockchain, such as Bitcoin, right? Meaning we don't observe the other actors. All I observe is a series of code that identifies Stavros from me, from Katie. I don't know if it's actually Stavros. I don't know if it's Katie. It's just some line of code. I can buy and sell cryptocurrency. Unfortunately, I don't know if I'm buying and selling it from a good actor or a nefarious actor. So one of the reporting disclosures they have to put here was we may be subject to anti-money laundering regulation, and we may be sued because we may actually purchase some of these digital assets from nefarious actors and may have to give it back. Now, right now, as Katie mentioned earlier, some of that's hard to observe and there is anonymity, but in some instances, as we've seen more recently with the pipeline, which we just found out yesterday, they were able to recoup some of the funds paid through ransomware. Some of that anonymity is starting to decrease. They also note here that to the extent that our private key is lost or destroyed or compromised, our value of that cryptocurrency, that 1 billion, we actually may not be able to access it. So when we're thinking about disclosures and worries for shareholders, they need to disclose upfront if it's possible, just like the first example we had, if they lose their private key or their private key gets stolen or somebody has access to it, they may lose the entire value of their investment overnight. So if you're a company and you're holding this, you need to tell your shareholders upfront, we may lose this key, somebody may hack this key. Because it's a public blockchain, it's not like if you lose your password to your email or you lose your password to your bank account, I can't click a forget password button. If I forget my pass key or I lose it or my dog eats it, it's gone. I can't get it back. There are now some forensic accounting firms that are trying to work to find ways to get it back. But right now, their success rates are incredibly low. And for the most part, if you lose your private key, if you lose that passcode, you lose your investment. So you need to have so many internal controls in place, which I know you all are going to get in a presentation tomorrow, to make sure that there's so many redundancies to where that password's in multiple spots, it's written down. You actually don't want it saved somewhere on your computer, because if it gets hacked, someone can take your money and you can't observe who hacks it. So these companies are starting to realize the risk and now put it into their financial disclosures.
And so MicroStrategy's auditors, to kind of give a slight picture of the current audit environment, they did report auditing of the cryptocurrency as a critical audit matter in their opinion. And they highlighted this because of some subjective auditor judgment in terms of whether the company controls the asset and in terms of who really has control of the asset. There are some third-party custodial services involved. And the auditors highlighted that they did need professionals with specialized skills and knowledge in blockchain to contribute to the audit. So just something, again, we'll touch on as we go through in some of the ethical implications, but just sort of the due care that's required here in terms of the knowledge that you need to, especially from the audit side, to understand your clients' dealings with blockchain and cryptocurrency. So just some of the audit procedures that they reported that they did was obtaining confirmation of the company's digital assets. And they compared the record of digital asset holdings to the public blockchain using a software audit tool, which they didn't describe any further. So likely some type of proprietary software that it was a Big Four firm has. So just to these examples here that we highlighted are just some of the language and terminology that you might start to see in annual reports. And so that's why we wanted to sort of start the presentation with this. Again, as Jack mentioned, it's not in every 10K and it's not every company, but so we can start to think about the risks surrounding it from a reporting and an audit standpoint. And so now kind of, launching into the area that obviously the board is the most concerned about. And so there's the Beek Center at Georgetown University, focused more on social impact, did create a blockchain ethical design framework in 2018. They were more focused on blockchain being developed for social good projects and social impact projects. But in general, sort of whatever the blockchain project is, or the reason for blockchain development, whether it's through an NGO or through a for-profit company, these were some main points which we thought, in doing some research, these are still some main points that are important regardless of the underlying purpose, and areas of risk or root issues of ethical areas. So we have governance. So that refers to the rules governing the system, particularly as it relates to in the accounting realm. We're dealing mostly with sometimes permissioned blockchains if we're talking about financial reporting potentially. So we're talking about a blockchain for a supply chain where we have a controlled group of actors involved. Or there's the public blockchain, right, where anybody can join. That's more with MicroStrategy and holding Bitcoin. Identity. So we referenced that in the Overstock.com example in terms of defining identity, to whom is identity granted. Again, particularly if you're talking about a permissioned blockchain, and then establishing some of the rules on the blockchain. So verification and authentication. So how do you verify the inputs and then authenticate transactions? And who has access to this? Who can read or write transactions and access anything in the system? So again, kind of depends whether you're talking about public or a private or permissioned blockchain. Ultimately, who has control or ownership over the data, and then security as well. So loss of private keys, any hacking. So these are just some of the elements that we mentioned. And what we'll try to do next is sort of, think about fitting these into sort of the framework, the ethical framework that the board has developed, and see how these can relate.
One of the other current areas that we're seeing some ethical issues arises with ransomware attacks. So if you think about a lot of cryptocurrencies that are accepted, most of them used to just be pass-throughs. So if my company accepted, I would immediately get it and convert it to cash or euros or whatever currency that I'm functioning in. The same as if I had a highly volatile currency. Now with MicroStrategy, some of these other companies, we're actually seeing them not only use it, but hold it. So when they're holding it, that does present some ethical issues, because the more prevalent it becomes, the more likely that we're starting to see these ransomware attacks increase. Lately, we've seen state and local governments have their internal systems locked down until they pay the ransom. In the US, we have seen this in Florida. We've seen this in water treatment plants. We've seen it in a bunch of smaller localities. Recently, meat producer JBS, which supplies about 25% of the meat to the United States, was hit by a ransomware attack. They couldn't perform any of their business operations until they paid it. The Colonial Pipeline, which shut down essentially gas on the East Coast because none of their systems would run, and they actually couldn't track how much oil was flowing through the pipeline, so they just had to stop. And then Travelex is a payment processor. They also had it. And as these ransomware attacks are becoming more frequent, the reason that is now, if I just pay in cash or euros, I can observe who's taking it out of the bank. So if somebody hacks my system and I have to pay them, I can observe where that money's going. With Bitcoin and cryptocurrency, you really can't observe it. You can't observe where it's going. It takes a whole lot. Now, there was an example for the first time ever yesterday. Actually, it was announced the DOJ, the Department of Justice in the United States, was able to claw back about 2 million of the ransomware paid to the Colonial Pipeline. So we think as those metrics be able to find some of these ransomware attack money and limit its use for these nefarious purposes, that will actually help using it from an ethical standpoint. But right now, Tesla recently announced that they were halting Bitcoin payments until they could get their head wrapped around ransomware attacks, because they didn't want to be associated with a currency that's being used for this purpose. So if a company is going to use it, I think they do need to actually think about, if we're accepting it and we're not putting these safeguards in place, are we actually implicitly contributing to the rise in ransomware attacks?
So taking all of these risks that we've kind of identified over the past 2 slides, we decided to try to fit these a little bit into the existing framework. So as it relates to, and we'll go through in the next couple of slides some specific ethical questions or issues to consider, but kind of overarching as it relates to integrity, a lot of the issues around verification and authentication. So the blockchain is viewed as sort of this magic technology that is always right and always correct. But the old adage that you've all heard, garbage in, garbage out, is still true for the blockchain. And how are transactions verified on it? We'll talk about a little bit, some questions about the consensus protocol. How is it decided that this is a transaction that is agreed upon by the parties and should enter the blockchain? How is that authenticated by the parties on the blockchain? So those are all, if you want the data on the blockchain to be of a certain value and integrity, you need to make sure that those issues that you agree upon, the consensus mechanisms, are robust. In terms of objectivity, this would relate to any governance issues that are established and access issues that are established. So it relates a little bit to the verification as well. Again, this is really kind of that read-write access. Who is viewing the blockchain transactions? Are there any conflicts of interest in terms of who wants these transactions on the blockchain, wants to have access to these transactions, and thinking about that from the standpoint of both audit and financial reporting. In terms of professional competence and due care, that has a lot to do with what was just mentioned on kind of the previous two slides. Any security issues and ransomware, identity issues, personal identity issues kind of leads right into confidentiality. The blockchain is viewed again as superior because of its anonymity, but that raises a lot of ethical questions and issues in terms of ownership of data and security. And it is still a hackable technology, especially as computing power becomes even more powerful. Like cryptography that underpins the blockchain is powerful, but as computing power like quantum computing comes into play, that cryptography can be cracked very easily. And then as relates to professional behavior, again, kind of going back to those bad actors in terms of who might be involved, especially on a public blockchain, and thinking about those identity issues. So try to just take some of these terminologies and interrelate them and weave them in a little bit. And now we'll go through a couple of slides of some specific questions that ethical issues that might arise.
Thanks, Katie. So one of the first things you need to think about is a lot of this, when you're setting up a blockchain as a company, you need to do the work on the upfront. Once you get it set up, it actually works really well. It's really easy, and the functionality is quite intuitive. If you don't set it up right on the front end, kind of Katie said, bad information in is going to lead to bad information out. The one thing you need to establish early is who has those rights and who has what permissions. You also need to establish what is consensus. So what consensus is if we have consensus, it goes on the blockchain. It becomes the record. Now, you can set up consensus multiple ways. You can use a majority. So if it's a buyer, a seller, and a shipper, as long as two of them say that this transaction happened, it gets posted. You can do a 100%, right? To where all three of us have to agree. You can do it based on dollar value. If you have a cryptocurrency-based blockchain, who has the most money? You can do it based on how large firms are. So when you hear consensus use of blockchain, it means whatever they decided up front. So it doesn't mean 100%. It doesn't mean 50%. Heck, it could mean a plurality, which could be 10%. So just know that when you hear that term, it is whatever those actors on that given blockchain decided they wanted it on the front end. So it doesn't have to mean everybody agrees, which is a common term that we hear. It's not necessarily right. If you look at what we have here from Deloitte, you said users have to agree on some accounting treatment upfront. So again, all this work needs to be done on upfront. So you have to say who's going to create consensus, who's allowed on, who's going to give permission. So if I have a buyer and a seller and I have one shipping company and we want to use a third shipping company, who is going to agree to allow that? Do we both have to agree? Can I disagree if I'm the seller and that's the only one I want to use? All these need to be thought up front. Katie, could you go forward one, please? We also need to think about bias in the algorithms. I heard a good talk yesterday. I was listening to some statistics podcast and it said all models are wrong. Some models are useful. So when we're creating these algorithms, we need to say upfront, okay, there may be some bias in it, right? So if I'm giving unequal weight to a person who has a larger holding, what if that person with the larger holding decides to take a turn and commit some fraud, or they have an internal systems error to where their wrong information is now getting posted because they have the most power? We also have to consider who is responsible for potential breaches. Right now, if a company gets hacked, it's very simple. That company is responsible for the announcement. If the blockchain gets hacked and all of us are equally sharing on it, which one of us is responsible for the breach, who's going to get sued first, and who has to announce to the public first? And that's not necessarily clear. So if we have these wide-scale blockchain, right, and we have these breaches, or you have these issues, or you have somebody who's subject to a hack on your blockchain, you're all sharing in that hack. Everyone has the same information. Everyone is observing it in real time. So you have to determine upfront from a governance standpoint, whose board's going to respond first, whose communication department is going to respond first. And we also have to think about these stakeholders and how they're incentivized. So if we have a larger use case where it's not just 3 of us, how are users incentivized to participate, right? Why would I leave SAP or Microsoft Dynamics and join your blockchain? So we have to determine, why is that going to matter? As I started this whole presentation, I said there's not as much use in financial reporting yet. And it's because right now the lift is convincing companies, why should they use blockchain over their existing systems? Most of us would argue it's more secure. There's more transparency on there, but you have some companies that I think are rightfully saying, maybe I don't want that much transparency. I don't want everyone to see. So if you're going to use a blockchain, you have to set up upfront how you're going to incentivize people to get on, and you have to make sure that everyone on has the same controls and computing power that you do. Lastly, independence. So there's a threat to independence if the auditor gets permission from the client's private key, right? So their key to kind of open up and see under the hood, accessing the client's cryptocurrency during testing, right? Because then you, as we all know, the auditor cannot act in a management capacity. So we can allow the auditor on the blockchain, but if they're actually getting the private key to go in your materials, see behind the firewall, so to speak, that's going to create some independence issues.
Yeah, and just to add as an example, kind of to the bullet point about stakeholders. So a good example or use case of this is blockchain is starting to be used for supply chains, especially as it relates to ESG reporting, to indicate that your supply chain is sustainable, or where your fish was sourced from, and tracking that fish throughout the whole supply chain. And so there is an example of a blockchain that to incentivize local fishermen to input their information onto this supply chain blockchain. The end company that's selling the fish it gives mobile credits for every time a fisherman uploads the information about, this fish was picked out of the river on June 6th, and kind of tagging that information. So that's a great incentive to have participation. But what are some of the implications of these incentives? Is that then shifting, in terms of a little bit more social implications potentially, so then the end company that has the money to establish the blockchain is incentivizing the fishermen downstream to participate, and what are all of those implications throughout the process? Is a good incentive, or can that be misused as well? So we have to think about those ethical implications. And then some other ethical issues, again, as we've kind of mentioned with the anti-money laundering and know your customer rules, you want to be able to verify identity without compromising the underlying intention of the blockchain, which ultimately was created to eliminate this extensive verification procedures and personal identity information. There could be a whole discussion about more behind the blockchain, but smart contracts are one area that a lot of blockchains run on, which are really just automatically executing contracts based on condition A was met, condition B was met, okay, then we're going to execute. A lot of these are linked with IoT devices, particularly in the insurance industry. So for instance, the flood insurance, there's an IoT device, it senses that water has hit this certain level. Okay, this warehouse was flooded, so let's trigger the insurance policy. So that's a great instance of the use of blockchain, but obviously, as we know, IoT and is being used a lot more extensively, and IoT has a lot of privacy concerns linked with it, right? All the smart devices that we have a lot of information on either if it's a personal information or a company's information. And in terms of the immutable nature of these contracts, right, they trigger and they go. And so there could be some issues that there's privacy rights that might be manipulated or taken advantage of as well. So these are again kind of a crash course in some of the important underlying features of the blockchain. And just a risk of overhyped potential and underdelivered results. it's a hyped technology right now, and so there's always that risk that people cloud their judgments a little bit as it relates to it, and over trust anything that's coming from the system, or over rely on the results from the system, thinking it is kind of almighty and all powerful, a little bit like artificial intelligence. Well, the machine is unbiased and said it, and we all know that's not always the case. So just taking that perspective as well. And then lastly, but certainly not least, and extremely important, is the really just the sustainability aspect of the blockchain. The public blockchain takes up an enormous amount of energy power for somebody to mine and be a part of it. So you're not having just one ledger, especially if we're talking about financial reporting. You're having multiple parties running this system, the capacity and space to store this information. The statistic here, this is in terms of the public blockchain. All the miners of digital currency will use more power this year than the whole country of Argentina. There's all these statistics about what countries' computing power versus Bitcoin's computing power, and so it's not something that should be overlooked in terms of it, because it certainly is a major issue in terms of energy usage.
I'm going to go through these next two kind of quickly because I've already covered most of this, but current GAAP accounting for holding these digital currencies that are using more power than Argentina as a country. Again, in the US, it's carried at intangible at cost, subject to impairment. And please note, in the US, impairment is under US GAAP. It is the lowest price it had during the marking period. So if Bitcoin drops 80% for a half second, then goes right back up, that company has to mark it down to what it dropped when it dropped 80% for that half second. So it's the lowest price during the marking period. It goes straight to earnings, and there's no recovery of losses. So as I mentioned with MicroStrategies, Bitcoin dipped about 50% in the past couple of days. They would have to mark it down, and they can't mark it back up if it jumps right back up. On the balance sheet, it goes after current assets and right before our other intangibles, such as goodwill, patents, licenses, things like that nature. So this is the US holding for it. Under IFRS, they currently have a mixed model approach. The US has, as Katie's going to talk about in a minute, though, the FASB hasn't issued formal guidance. So this is mostly informal guidance on the US GAAP side, although all four of the big four accounting firms support intangible assets subject to impairment. On the IFRS side, the general rule is also an intangible asset under IAS 38, but if you're holding it for sale in the ordinary course of business, so if you're actually using this to generate profits, then you can actually classify it as inventory under IAS 2. There's a little higher of a bar there, but under IFRS, you could see it under inventory. Under US GAAP right now, inventory is currently not supported, or at least by any of the firms. Again, FASB has not issued formal guidance. Classifications that have been outright rejected by the IESB, cash, because there's no medium of exchange. Right now, as I mentioned to you earlier, the largest use of digital assets is for speculative purposes or as reserve assets. Because of that, a lot of people, given a small group though, a lot of people are just holding it, and then it's not actually a modicum of exchange. And there's also no support as a current financial asset as we consider financial assets, as all of us have studied financial assets in the past, because there's no contractual right, nor can you settle in its own security. So because of that, a current investment or financial asset are not supported given the current standards.
So FASB, currently came out and said that there's some quotes from board members that they don't have, they're not planning to address the challenges until it becomes more pervasive. But actually just reported in May by the New York State Society that a bipartisan congressional group in the US has asked FASB to reconsider and think about establishing accounting standards for digital assets. They actually cited in this letter the MicroStrategy example, and the fact that they had this large impairment loss that they recorded. So this was the example, and the letter stated that the definition of financial instruments should be updated to include digital assets such as virtual currencies. Whether or not the FASB takes note of that and decides to look into it further, but just sort of a more recent US-based development here. And the AICPA in the US has also issued a practice aid for accounting for and auditing of digital assets as well. So they highlight there, they don't focus on ethics or independence considerations, they point that out, but they do focus on some issues and noting, you know, what is the client's integrity and strategy? Why are clients actually getting into into Bitcoin or blockchain, right? What is it? How does it relate to their ecosystem? What is their underlying reason for it?
Our last and final slide is on the SEC and the Canadian Securities Administration. Right now, a lot of these currencies that are being issued outside of Bitcoin and Ethereum, they're being issued as currency. Well, as we just said, right now, the IESBA and the FASB in the US have so far both rejected it as a cash or currency. So when they're issuing this, they're saying, well, we're issuing a currency, we don't have to go through the security process. The SEC and the CSA clearly disagree. So if you're issuing something that looks like a security, smells like a security, and actually is going to operate like a security, you have to register it through the formal process. In 2017, when 2015 and 2017 was the height of new currencies being issued, exactly one was issued as a security that filed the proper paperwork. So if you're a company right now who's going to hold some of these non-traditional, again, essentially Bitcoin and Ethereum are the two, and they're not issued through the proper channels, you may have some risk because you're now holding something that didn't file security statements. Over 80% of the the tokens or coins issued in 2017 actually never had a coin issued. So they got the funds for it and they just died. So when you're going through this process, right now the SEC is pushing entities that are issuing new tokens, coins. For example, Facebook at one point had looked at issuing their own. JP Morgan has looked at issuing its own JPM coin. They are expected to go through the security process.
So that's our brief, quick overview of some current issues, and we're happy to take any questions now, or you can always contact us as well. I'll stop the screen share now just so we can all get a chance to see one another, but we appreciate that you welcomed us to this meeting.
Yeah, thank you all for having us. This was greatly enjoyable.
Stavros, you're muted.
Stavros, you're on mute.
I was just thanking Katie and Jack, and we have just a few minutes for questions. And I would like to ask Brian to direct the conversation, but briefly, please.
Happy to do so. If there are questions, please put your hand up. In the meantime, I have a question. Not seeing any hands right now. I'm wondering about your thoughts on how, for example, an announcement last week by El Salvador's president, where they are in the process of arranging for Bitcoin to be accepted as legal tender within the country, and how that might accelerate the process of recognizing Bitcoin and such assets as cash, and how that can obviously change the landscape quickly, and clearly what's happening with various central banks who are still in the point of exploring what's going on. But China, for example, is running its own pilot test with crypto.
I think even if they're going to accept it, you then have to convince somebody who's holding it that you're going to give something that can potentially double in value tomorrow to actually use it as a means of currency. I think that's the harder sell, right? I think the acceptance is a good start to getting it used more actually as its intended purpose as cash. But I think until people don't think that they have an opportunity to double or triple their money, which we've seen people become millionaires overnight with this, I think you're going to have a hard time almost prying it out of somebody to use it as currency. Now, as it becomes more available and the price stabilizes, if the price stabilizes, right, we actually don't know that's going to happen, but if the price stabilizes, then I think you would start to see it push more towards that cash amount. But right now, with the price being so volatile, everything is speculative. I think people are giving up a lot of opportunity cost if they do decide to use it as currency. There's the famous example where a gentleman bought, I think, 3 pizzas, and those pizzas ended up being worth about $8 million because he used it early on in the process when it was about worthless. So I think right now nobody wants to buy an $8 million pizza. That's just my 2 cents on it.
Interesting.
Okay.
Thanks, Jack. Yeah, I think it's interesting to think about that currency
Brian.
of a reverse issue of some developing countries where you see massive deflation in currency, but here there's an interesting upside risk. Galen's got a question?
Well,
Yeah,
Vanya has a question. Can I ask
Yeah,
that
sure.
Vanya goes first and Galen later? Vanya?
Sorry, thank you. Sorry, Grady. Thank you, Kate. And I think that the presentation was very good. You mentioned the difference in treatment between IFRS and US GAAP. Do you foresee any kind of harmonization in that? Because it will be so important for us that are involved with corporate reporting to have the same treatment, the same expectations about the team.
Yeah, I don't know, if the boards, I'm not knowledgeable on whether the boards have come together extensively about it. I tend to think that because it's so growing so much and it has no borders really, that I think it would be beneficial that they do come together, because it's especially if it starts to become a medium of exchange and business to business transactions, which it hasn't really yet. I mean, it's very small examples it has. So I don't know that they have entered into any type of agreement thus far. But in my personal opinion, I would agree that it would make sense and be beneficial for accountants to have them come together on this issue. I don't know that it's right now on the agenda. Well, definitely not for FASB, and it's not on the agenda list for either.
Galen?
Yeah, thank you, Katie and Jack, for the excellent presentation. My ears perk up when I start hearing what auditors might do, and in particular, your example where they have access to private access key to the blockchain, and when they might be testing for existence. So, I'm trying to get my arms around this. How does that work? If they have access to the private key, can they change that private key? That would be my first question, because, wow, I can't imagine putting auditors in that situation.
So you can give them access to the private key, which that's the independence issue, because directly to your point, they could change it. There's a group of banks, I think in Taiwan, that actually have allowed the auditor on as a read-only node. So they can observe all the transactions, but they can't go in and change the keys. So probably if you're thinking about the best audit approach, putting them on as a read-only node, kind of the same way to where SAP can give an auditor access to look in the system without changing the system, that's probably your best bet.
Thanks. And Ken has his hand up.
Yeah, thank you, Brian, and Jack and Katie. Thanks very much for your presentation. Very, very enlightening, I must say. Just a question. I was intrigued by your comment that essentially when you have a blockchain, basically it enlarges ownership. So, maybe it's a private blockchain or even a public one, but basically whoever is part of that consensus owns or has an ownership stake in the blockchain. And under our code, we have provisions that deal with non-compliance with laws and regulations. Accountants' responsibilities when they encounter instances of non-compliance with laws and regulations. And I'm just wondering whether that basically that situation raises a question as to whether auditors or accountants' responsibilities potentially could be enlarged, because rather than just kind of dealing with the issue with an entity's management, essentially now they're going to have to grow broader and look at or basically engage with the different owners of the blockchain, so to speak.
Yeah, definitely. And Jack and I have talked about this before, and you also, there's a lot out there about, kind of SOC engagements growing a little bit more in terms of is there maybe an auditor of just the blockchain, right? And not, if your client is using the blockchain, it's part of their IT system, just like they have a payroll processor as well. And, you know, and there's a separate audit of that blockchain, because if it's part of your, I mean, you know, you're relying on that audit, obviously through a SOC engagement, but you're not, you know, it's not expanding the scope of your individual audit of the financial statements as a potential future avenue, because it can just kind of grow in the true sense. If a blockchain is truly used in its original intent, then yeah, the number of actors on it is so large, and you as an auditor, you know, what is your role over all of them? So we kind of see it as potentially shifting to be, you know, blockchain A has an auditor or a team of auditors, and then if your client is on that blockchain, you rely on those tests of controls of that.
Yeah, and as Galen mentioned, it does present a quick independence issue, because, right, as we know, you can't serve as an auditor of one port or help design a blockchain, right, and then also audit it. So if 4 of us are on there, and let's say we all have a different auditor, but that firm in a consulting capacity helped us design the blockchain, we're now going to have some independence issues, particularly in the US with SOX, right? Like, that's a hard cut. You can't do it. So now you not only have to consider who designed your blockchain and who's your auditor, but you also now have to consider, okay, who else is going to be using that? Because now that does create a conflict of interest from a non-audit service standpoint. So, you know, that's something we haven't seen yet, because the financial reporting adoption isn't broad. But I'm going to imagine as soon as, if it picks up, as we kind of think it's going to, that's going to become, I think, one of the biggest issues, is having auditors who helped design it, or consultants that helped who design it, who are now auditing it.
Thanks so much. Yeah, I think where we are seeing that is within e-commerce, sort of assisting blockchains that have been developed, right, by some firms. And I can think of some examples in Asia, for instance, that probably are familiar to you as well. Excellent. Well, thanks. I see no further hands here, and I know that we are needing to move on in the schedule. So with that, thank you very, very much, Katie and Jack. Excellent presentation, very informative, lots of questions that came your way, and thank you for your responses as well. That was super informative.
Thank you all for having us.
Stavros, you're muted.
We're just thanking also Jack and Katie for their very, very stimulating presentation. Thank you very much. Okay, I think it's time for a break. And I would like to take a break for 10 minutes, please, not more. Thinking of all the people who are in late at night time zones. So 10 minutes, and we'll come back for the presentation on the NAS and Fees Rollout with Kim. Okay, thank you. Okay, we are back in session. And I do see Kim all ready to go for the presentation on the rollout. So Kim, please.
Hi, everyone. Thanks, Stavros. I think Diana's going to put the slides up, if I recall.
Okay.
Okay. Are you able to get it? Okay, that's great. Okay, if you can move to the next one, please. So we're going to spend some time today talking about the rollout activities for NAS and fees. We'll talk a little bit about some of the resources that are currently available, the pending webinars, as well as the webinars that have taken place, what we are expecting for later in the year. And then I'm hoping Dave is here from IFAC, from Communications, where he can update us for on some of IFAC's activities. Can I just see, is Dave here?
I am.
Okay, great. Hi, Dave. Thanks.
Hi.
Okay, next slide, please. Thank you. So we just wanted to start out by letting everybody know some of the activities that have taken place in the last several months with the issuance of the 2 new standards. There is a dedicated webpage on IESBA's site that specifically addresses all of the materials for both the non-assurance services as well as the fees standards. That page includes basis for conclusions. It also has an infographic, which is a one-pager, I'll call it, that really highlights both the NAS and the fees in one document. You can also see, I think we have about 15 videos that have been prepared by various board members, and Galen has also participated. They cover various topics, which include materiality, communication with those charged with governance, self-review threat, fee transparency, fee dependency, key regulatory concerns, and a host of other topics. They all run, I think, between 2 and 3 minutes. And so if you do have an opportunity, please take a look at the videos. In addition to the videos and the information that's available on the webpage, Dave also sent everyone in May the social media toolkit, which provides us with various hashtags and postings for Twitter and our LinkedIn accounts. So if you do have an opportunity also to share some of the information regarding the NAS and fees on your social media accounts, please do. I think that email really provides us with all the information that you would need. We have under resources available webinar materials. That's a bit premature. We do not have the webinar materials up on the website yet, but we will be linking to webinars that have taken place already, in addition to the PowerPoint documents that we will be using for the upcoming NAS and fees webinars. I'll talk about that in a moment. We also plan on, as you all know, on issuing FAQs, and of course we will follow whatever the appropriate protocol is for issuing the FAQs. We will also have various articles we plan on drafting in addition to fact sheets. And the fact sheets will be a bit different than the infographic, as we're anticipating a fact sheet, one for fees and one for NAS. Next page, please, Deanna. Okay, so the webinars. I think IESBA in particular have been very successful with our various webinars that we have provided. There have been 2, at least that I'm aware of, CPA Australia, where Richard and Ian participated, and make sure I get this right, the South African Institute of Chartered Accountants, where David Clark was the presenter, and I believe they were quite successful. Next week, there will be 2 separate webinars, one on fees, one on NAS. The NAS will be Richard and myself on June 16th. And on the 17th will be fees, which will be hosted by Caroline and Ian. And to date, we have approximately 600 participants for each of those webinars. So hopefully within the next week, we'll have some additional participants to join us. In addition to the webinars, what is being contemplated for Q3 is a live Q&A session with potentially various board meetings. We're working together with IFAC communication staff to determine if there is the ability to be able to do some type of live interaction regarding Q&As for fees and NAS. So we will see how that turns out. And in addition, we are looking to see if we're able to do a PAO roadshow. And the roadshow really would target specific PAOs to see if they're interested in partnering with us, or for them individually to present on NAS and or fees. They would, of course, have access to all of the information that we have available, which would be the webinars, the videos, etc. So some of the PAOs that have been identified include Accountancy Europe, the Asian Federation of Accountants, Inter-America Accounting Association, and several others. So again, we are working with IFAC to determine if that's possible and how we can go about supporting some additional type of outreach. Next slide, please. We also will be updating the summary of prohibitions for pies. And I think the majority of folks on the call here are familiar with this one pager that we currently have that at a high level identifies pie prohibitions, and it will be updated for primarily for the NAS prohibitions, the general prohibition for self-review threat, and also go into some additional detail regarding some of the prohibited services. We also expect that it will identify the fact the materiality when looking at a self-review threat for pies is not necessarily any longer a consideration. So we believe updating this document will be very helpful. I know I've used this document before, and updating it, I think will be helpful to our stakeholders. Next slide, please. Thank you. So before I hand it over to Dave, maybe I'll just stop there quickly, and then Dave can go talk a little bit more about some of the IFAC work in this space. But wanted to just see if there's any questions, any comments, any thoughts regarding the work that we're doing for the rollout of NAS and fees. I think the webinars will prove to be very helpful. We expect to have questions that we will accumulate. We'll try to answer them, of course, on the webinars, but also take them away for consideration for some of our Q&As also. So Dave, if that's okay, I'm just going to open it up and see if anybody has any specific questions or comments.
Okay.
On the rollout.
Any questions for Kim or comment?
Floor is open.
I don't see any.
Are we good, Ken?
Yeah.
Okay,
Yeah.
thanks. So let me turn the microphone over to Dave Johnson, and we've all met Dave before. He is one of the senior leaders within IFAC on the communications team, and he has really been working with us to try to figure out the best strategy regarding the rollout for NAS and fees. So Dave, let me turn it over to you, and if you can just give an update on where we've been with respect to partnering with IFAC and what we anticipate perhaps going forward. Thanks.
Sure, and thank you all of you for allowing me to join. Just a recap of what we did April 28th and up until now, and what we're looking to do moving forward. We released on April 28th, and I think, as most of you are aware, a release for us consists of posting it on the website, sending it out to our mailing list, which is at this point approximately 21,000 email addresses. And then that includes subscribers and our press contacts. And then we posted it on social. So I'll start with posting on the website. It immediately became the most visited page on IESBA in the first week, but also because we're able to track through Google Analytics the site traffic across all of the IFAC sites, we took a look, and it was a top 25 page across IFAC, I believe, for the first month, which is good considering that that's all IFAC pages, and including anyone who would just visit ifac.org or About Us, etc. So that was really good traffic. The average visitors stayed over a couple minutes on our page, so they clearly were going to learn more information. The NAS actual revisions, the PDF document since we released has been downloaded over 650 times. I think 670 to be accurate, and then the fees pronouncement has been downloaded 430 times since that time. Also, as far as our subscriber list, we were able to get some trade press pickup. We've got accounting today and accountancy today. Also, blogs that are important in our within our audiences. Audit Conduct, Accountancy Wire picked us up, and then multiple PAO publications as well. On the social push on Twitter, we've posted 5 times since April 28th. Obviously, our first post had the highest engagement and was one of our more highly engaged posts of the year. LinkedIn as well, we've posted 5 times since April 28th. Most recently, now we've transitioned into posting the lead up into the NAS and Fees webinars, which are scheduled for next week. Like Kim said, over 600 attendees for those so far, and we plan on making pushes today, tomorrow, and then also a couple days ahead of the webinars. Moving forward, as Kim had mentioned, we still have a lot of deliverables we plan to see through, including the FAQs, the fact sheets, but then also this really new approach toward engagement moving forward with the PAOs, and these live Q&As that we're scheduling for later in the year, I think will be very exciting. A new way to target our audience and maybe spawn some new engagement through the PAOs. And that's it, unless anyone has any questions for me.
Okay.
Thanks, Dave.
Thank you, Dave. Thank you very much. Let's see if someone has a comment or a question, please. Raise your hand.
I see no hands raised, Stavros.
Okay, back to you, Kim.
Okay, no, I think that's it. Hopefully you'll be able to join us next week on the webinars. We're looking forward to it, and then happy to report back after that. So I think that's all for me right now, Stavros. Thank you.
Okay, thank you very much, and I think we're all looking forward to the webinars. This is very good, and the numbers are good. So I'm very, very happy that this is going forward. I believe that we don't have anything else on the agenda now, Ken, do we?
That's correct. That completes the day today.
Okay, okay. So I'm going to close the session. We have some colleagues and friends that need to go to sleep. In fact, it's quite late for them, but not everybody. So I want to thank you all for this very successful first day, for participating and for the presentations. I really enjoyed the outside presentations on blockchain, and I know we have 2 more coming. Blockchain to me is one of the more mysterious items around, and I really, for the life of me, have never understood why it's called currency. It's not a currency at all. It's an asset that's very volatile. And I don't envy, was it San Salvador, somebody said, that they're going to use it as a currency, because imagine what havoc you can reap in an economy using as currency an asset that's very volatile. And I'm sure it's going to destroy their accounting systems as well, because what is the unit of account when you have very volatile currency. Anyway, it's still a mystery to me, but I'm sure there are people among you who understand it. And I hope we'll be having more discussion about that. So thank you all. We'll see you tomorrow at what's the hour tomorrow, Ken?
Yeah, it's 5 o'clock in the afternoon tomorrow, Eastern time.
Yes, yes. So it's going to be a bit hard for us Europeans. Yes, yes. Okay, that's great. We'll enjoy that. So see you tomorrow at the appointed time, and we'll go on. Thank you all. Have a good rest. We'll talk tomorrow. And goodbye.
Thank you. Goodbye.
Good day, everyone. Good night.